Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video, I am going to answer a question one of the community members have asked, and that was there's an ETF called SCHD Schwab US Dividend Equity. That ETF is not itself Sharia compliant. So one of the community members said, is it Sharia compliant? Obviously, my answer was straight away, definitely no, because it has all sorts of companies in that ETF. There's about 50% of the companies in there are Sharia compliant. The other 50% or whatever, it's definitely not Sharia compliant because it includes a lot of companies that either dealing with alcohol, dealing with weapons and all of those stuff, okay? So what I decided to do is, and what I've said to the community member as well, was I will look at that ETF and pick 10 companies or the top 10 companies that are Sharia compliant and put it together in a nice layout so we can at least share with the community. Out of that, if you're picking your own stocks and obviously you can't invest in that ETF, but you're really interested because there's some great companies in there, then you can actually look at you can actually purchase these companies instead of obviously buying that ETF. So what I want to do now is share it with you. So this is what we're going to do, and I'm sure if you've been around, you've been watching my videos, you know what's going to come. So I've got 10 companies here. You've got the ticker, the company, the sector, the Morningstar economic moat rating, so the white mode, narrow mode, and so on. We got the dividend yield, the 5-year growth rate. We got the payout ratio. We got years in dividend increases. We got the safety of that dividend according to Simply Safe Dividend, profit margin, okay, which is important, free cash flow here, and then how much cash basically the company has in order to pay us that dividend. Can they even cover it? Then we got the total return of the last 10 years, and then we got growth estimates in the next 5 years. So is this company going to grow their financials in the next couple of years? And then Morningstar valuation and fair value. Like I've always said to you, Morningstar is the company that I use a lot, and this company is basically, when it comes to valuations, I do think they're quite conservative in terms of their valuations. And then fair price, so if you were to purchase this stock, what price should you pay for? Okay, again, this is not financial advice. Please do your research before you do this. And if you are sitting there thinking, you know what, that company I don't like, whatever, I'm only putting together the top 10 companies in that ETF that are Sharia compliant. So this is not in order or anything like that. I just put them, actually they are in order of the weightings, for example, okay, in order basically. Right, so let's have a look at the year to date, how this ETF is doing. And if you look at this, you can see here is about 8% down a year to date, and for 1 year is about 4% down. So it's not really as volatile as the rest of the markets. But let's see some of the companies that are included in that ETF. If you're interested, just type basically SCHD Schwab ETF, and then you will find it. You can even go to their website and find a bit more information about it, okay? Right, so let's have a look at the first company, and on the top, I think it's about 4% of this ETF is a company called Texas Instrument Incorporation. So this is a semiconductor company, technology out there. It has a wide mode, 2.7% dividend yield, 5-year growth rate of 21%, and payout ratio 48%. And they have increased that dividend for 33 years in a row. The safety is 90%, which is really good. Profit margin is 43.6, which is really high, and they have almost $6 billion in the bank. Okay, now free cash flow there. Normally, I've always said to you guys, free cash flow is excellent because you can use that money to buy companies, to pay off debt, to pay off basically, pay dividends. All of these things, there's about 5 to 6 different things that companies can do with that money. Okay, so it's really good. Total return, we're looking about 21% in the last 10 years, which is really huge. But because it's technology companies, I'm not really surprised. And then next 10 basic 5 years, they're expecting about 10% growth, and it's fairly valued at the moment. $166 per share is their fair value. The next company we're looking at is Home Depot, a company that I own in my portfolio. I think this is also about 4%, I think 4 something percent. It has a wide mode, 2.55% of dividend yield, 18% 5-year growth rate, 42% payout ratio, and they have increased that dividend for 34 years. That makes them dividend aristocrat. Both of these companies are now dividend aristocrats. Safety Dividend Aristocrats, a company that have increased their dividend for 25 years or more. Kings are 50 plus basically. Okay, Safety, we're looking at about 87%, profit margin of 10%, free cash flow of $10 billion, and total return in the last 10 years, we're looking at almost 20%. And the next 5 years, they're expecting every year this company to grow about 16%, which is very high. And that's probably one of the reasons why it's basically trading a premium right now, 16% premium, $267 per share is the entry point if you are interested. Okay. Before you do that, please make sure you do your research. The next company is Cisco. As you can see, it has now been changed to a wide mode, 3.31% of dividend yield, 5-year growth rate of 6%, payout ratio of 52%, years dividend increases 11. Okay, Safety, we're looking about 91%, profit margin almost to 23%, free cash flow of $13.5 billion, and total return of almost to 12%. Okay, in the last 10 years. Next 7 years, they're expecting about 7%. Next 5 years, they're expecting about 7% and 12% discounted at the moment. 54 is the price target. And the next company we're looking at, Amgen, another company that I own in my portfolio. It has a wide economic mode. 3.22 is their dividend yield. Okay, 12%. One of the reasons actually this ETF is very popular is because it has a high yield. Okay, so and you can see a lot of the companies that we're talking about now, especially the top 10. Okay, they have a 2% or more yield, which is quite high, right? So as you can see, 5-year growth rate, we're looking at about 12%. Payout ratio 63%. 5 years dividend increases, it's 10 years. Safety 74%, which is definitely safe. Profit margin of almost 25% and $8 billion in the bank right now of free cash flow. In the last 10 years, basically they have given a return. So total return they have given to cut basically their shareholders is 13%. And then basically next 5 years, they're expecting about 8% growth, fairly valued at the moment. $260 per share is the target. The next company is another pharmaceutical company that I own in my portfolio. That it has a wide mode, over 3% dividend yield, 5-year growth rate of 7%, payout ratio 42%, and then 31 years of increase in that dividend. It has one of the highest dividend Safety, which is 99%. Okay, that's the highest any company can get. Profit margin is 29%, free cash flow of $14 billion, and 10% return in the last 10 years. And next year, basically 5 years, expecting about 11% every single year. So that's per annum, by the way, that's not total. So every single year they're expecting the earnings to grow about 11%. Fairly valued at the moment, $94 per share is where it is. I think right now is about 90 something. I can't remember where it is right now. Where is Merck? There we go, 89. So close to that right now if you think about it. The next company we're looking at, again, another company that I own in my portfolio, and that is Broadcom. Narrow Morningstar economic remote rating, 3%, over 3%, 3.15% dividend yield, 43% 5-year growth rate, which is very, very high. I think that's the highest in here that we've got. Payout ratio, we're looking at 73%. Years dividend increases 11 years, and they have Safety of 67%, which is quite good. 61 and above is good. Profit margin, we're looking at about almost to 29%. Free cash flow, $14 billion. Total return in the last 10 years, we're looking at about 32%. Okay, and then growth in the next 5 years, expect to 40%. 12% discounted right now, $624 per share. It's where they are. What I'm going to do is at the end of this, I'm going to show you where the halal screen. So where all of these companies based on Zoya, what we think, whether they are compliant or not. They are all compliant, but I'm going to share it with you definitely. So stay tuned for that one. Next company we'll look at is Pfizer. Pfizer, obviously, I'm sure you know about it. It has a wide economic mode, over 3%, almost 3.5% dividend yield, 5-year growth rate of 5%, 30% payout ratio, 12 years of increase in dividend, 75% of Safety, 29% profit margin, and $28 billion in the bank right now. That's probably the highest in this list. Okay, free cash flow that they can do all sorts of things. And then total return in the last 10 years, we're looking about 10%. Next 5 years, basically expecting minus 1.6, and this is one of the reasons I sold out of this company, is basically what the expectation is for the next 5 years because of COVID out the window, the COVID vaccine and stuff. Okay, and yesterday there was actually news that Moderna, I think, is suing them for some technologies thing that they've stolen from them, blah blah blah. But yeah, so it's right now is minus 1.6% growth expected, so that is not good. But obviously anything can happen, that can change anytime soon. Fairly valued at the moment, $48 per share. I think when I sold it was about 50 something. I'm not sure what it is right now. In fact, let me quickly check. 46. Okay, I sold it when it was 51, I think. The next company is automatic data processing, has a wide mode, 1.66%. Okay, so it's probably the lowest, I think, in this list. 13% 5-year growth rate, 56% payout ratio, and 47%. This is almost now becoming a dividend king. So another 3 years and it will become a king. Safety 97%, which is one of the highest here. Profit margin almost to 18%, $2.5 billion of free cash flow, and return we're looking about almost 14.5% in the basically in the last 10 years. Now next 5 years they're expecting 17%. That's probably why this company is expensive right now. $228 per share. It's the target for this company. The ninth company we're looking at is Kimberly-Clark Consumer Staples. It has a narrow mode and 3.58% of dividend yield. That's probably the highest in here. Okay, 5-year growth rate of just 4%. Payout ratio is 86%, which is very, very high. And basically they have increased this dividend for 49 years. So one more year, this company will become 50. I'll become a king, if you like. And then safety is 88%. I think it's probably because of that cash there. Okay. Profit margin only about 9%, $1.8 billion of free cash flow. And then last 10 years, they have returned about 7%. And the next 5 years, they're expecting about 6%. Fairly valued at the moment, and $126 per share is the target. Final company is EOG Resources. This is an energy company. It has a narrow mode and 2.41 different dividend yield. In terms of the 5-year growth rate, it's about 24%. Payout ratio 27%. 5-year growth rate years in dividend increases 30 years. Safety, so they are different in Aristocrat as well. This is one of the companies that I'm looking to put into my portfolio in the long run, but is really expensive right now. But yeah, if I were to buy an oil company, I'll probably buy this one. 30 years, and then you've got safety over 82%, profit margin, look at that, profit margin almost 26%, and free cash flow of $3.8 billion. Total return in the last 10 years, we're looking at about 10%. Next 5 years, basically 10% every single year. That's probably one of the reasons I'm interested. Right now, it's too expensive, so it has to come down quite a bit. 27% right now. Basically the price should be about 98. I think right now it's about 120 or something like that. Yeah, $124 per share. There you have it. So those are the 10 companies that are in that ETF that are Sharia compliant, that you can do a bit more research if you're interested. So if you were interested in that ETF and you know it's not compliant, then maybe look at the individual stocks and see if you can get into that. Now let me quickly show you. Okay, the 3 categories we're normally looking at: the business activity, the interest-bearing debt, the interest-bearing security. And as you can see, every single one of these companies have either 100% or 99% when it comes to the business. Interest-bearing, the highest one is Amgen. That's the company that I own. I'm watching right now. So when it hits 30 or 33, whatever in between, then that's when you start to worry about it. Okay, but the rest of them seem okay. And then when it comes to the security side of things, it's not that bad at all. Okay, so they are all, the highest is about this one here, about 8%. So the rest of them, 10% there. The rest of them are actually below that. There you have it. So they are all compliant. Okay, but you just now need to go away, do your own research. If you're interested in any of these companies, then obviously you have to do your research. As I always said to you guys, please subscribe to the channel if you haven't already, and most importantly, give that video a like so more brothers and sisters can benefit from it, inshallah. Assalamu Alaikum.